All right, welcome to the Bitcoin mining workshop number 2. Welcome to San Antonio Bitcoin Club located here at Alamo Labs. Thank you for coming. This is a monthly mining, we call it a mining workshop. It's mostly just a real informal conversation, just going over the latest news and current events going on in the mining world. See if people have any opinions, questions, and I just kind of curate a few things that we can go through to lead the conversation. So again, this is the second edition of the Bitcoin Mining Workshop, and let's get right into it. So the first thing I want to try to set a recurring theme to these each month is to get a look at the current state of the mining industry from a profitability standpoint, looking at the difficulty rate, and any just general hash rate trends that might emerge. There are some pretty interesting things that happen during certain periods of time throughout the year that we tend to see as recurring themes or trends. So we'll dive into a few of those. The resource I really want to use to kind of keep us updated, I really like it personally, is Luxor. So we'll go to the hash rate index is the, and this is going to be another format I'm kind of attempting this month is I'm going to lead by using a lot of the content and ideas and the stories directly from the source online. So last month we kind of talked about the hash rate and the current status of it, and I didn't give a great explanation of what the difficulty rate is, so I kind of wanted to go through that. In my research for this, I noticed hash rate index has a pretty good definition, so I'm kind of going to go verbatim from it. So you'll see a few things that we'll go through here in the chart. But first I want to start with defining what the difficulty adjustment actually is. So down here it says, oops, let's not do that. It helps Bitcoin miners pay attention to swings in Bitcoin difficulty. It's important to monitor the adjustments as they may affect the Bitcoin denominated rewards miners earn in exchange for their hash rate. It tracks the percentage change in the Bitcoin difficulty for each epoch, which each epoch is roughly 2 weeks or about 2016 blocks. So the Bitcoin network evaluates the prior epoch's average block time. And one thing we did talk about last month is the way the protocol is set up is that we're trying to keep each block to about 10 minutes. And so this is how the difficulty helps keep that block about 10 minutes. If the average time is below the 10-minute targeted average, then the Bitcoin network raises the difficulty to ensure that consistent block times and the rate of issuance. So to make sure that we stay around the 10 minutes, if the average is below 10 minutes, then difficulty is ramped up. If it's above 10 minutes, then difficulty is ramped down. If block times were slower than 10 minutes on average, the network will decrease. So it gives you a little idea of what the reason for the difficulty rate and how it affects profitability for one. So this is a cool little visual. Actually, not 5 years is too long. So over the course of the last year, every 2 weeks, we mentioned the difficulty rate changes based on the average block times of the past 2 weeks. So what it's showing you here is that every 2 weeks, whether the adjustment was up or down. And you can see the trend is mostly up. So over the course of, this is 1 year, we can look at 5 years. Most of the times it's up. And what you can see this in another way is through this chart up here. And I'll take away these first two to kind of just let you see the difficulty first. And let's do it over like a year. Whoops. So we'll take off the Bitcoin price and the hash price, which we'll go over too. Again, it's just pretty much up and to the right. There's a few corrections in hash rate, which could be interesting, and sometimes there's reasons for them. But on average, and if you look over the course of 5 years even, Bitcoin difficulty is just continuing to rise. And this is a reflection of all the hash rate that's online in the world. So this is miners big and small, from corporations to private and public companies to, plebs running a miner in their basement. This is the hash rate going up and to the right over the course of the last 5 years. So when you overlay a couple things, this is the Bitcoin price over the last 5 years. And you'll see, like, this is the last bull market, basically. Bitcoin price kind of tends to come above hash price, which draws hash price up. And so you'll see times when, mining is a bit more profitable than others. But in general, difficulty and Bitcoin price do trend along the same way. What doesn't trend the same way is hash price. It trends the opposite. And this is the profitability, basically, that you'll see as a miner, depending on the hash rate you have. So over the course of time, it's just continuing to decrease. This is something we know. This is something that is, planned in the issuance. So, I'm sorry, do you have a question?
Yeah, so how you turned on the USD line,
The Bitcoin price?
what tends to happen when the yellow line crosses over with the difficulty adjustment? I assume it's like crazy price action. Is there usually like a sell-off, or do Bitcoin miners see where
You can see.
where it first went up over in 2021?
So you can go back even further to like the 17 bull market,
So
17, 18.
I guess what does that tell you? Like the big spike right there in the middle, when it went over and then when it went under. Like what does that tell you?
Usually when the Bitcoin price has a blow off top, which we see towards the high end of the cycles, it leaves behind the difficulty rate and it leaves the hash rate, further behind, which means the current miners and those who are actually have hash rate online become more profitable. So, for instance, right here at the peak, you can kind of see Bitcoin was 13,000. Let's lay over hash price, actually. That's actually not going to be a good example. Either way, when Bitcoin price is above the difficulty, it means that it's just more profitable for current miners, and it's an incentive for new miners to come online. So you'll see an equilibrium balance out as it does here. More hash rate comes online, Bitcoin's price goes through its bear cycle, and it tends to even out. And then you'll see difficulty come above Bitcoin price, and then we see another Bitcoin bull market where it comes up, and it's going to go above the actual hash rate, which you'll see a big increase right here relative to the time frame. So Bitcoin hash rate tends to try to increase because Bitcoin price is increasing, which means it's more profitable. It's a bit of maybe a hopeful time for our current situation. We haven't seen Bitcoin price, burst above or short squeeze above the actual hash rate. So it kind of says something to maybe the situation that we're in with the current cycle. Okay, so it's just a good primer to see how Bitcoin price and hash rate affect miners, big and small. Let's get out of this real quick, and we'll move on to the next set. Any questions about the difficulty or profitability or anything regarding this update that we'll do monthly? Just please reach out or just jump and make a question known. You don't have to kind of raise your hand or anything if there's any questions. Let's move on though. Oops. Okay. So the next story I kind of wanted to talk about is Saz Mining. Saz Mining is a company, a U.S. company that provides hosting services, and they kind of had a really cool announcement this week that I wanted to include. So first off, to kind of give a little bit of a background about Saz, first off, they are sponsoring tonight's event, so a big shout out to Saz Mining. Thank you for that. So we kind of want to go through what they are as a company, what they offer as a product, and then the news announcement that they kind of made, which made me want to kind of share this with you guys. So Saz Mining is they're coining a term that I think is really cool. It's Bitcoin mining as a service. And they do this in a few different ways. They have a really cool platform. It's like an app where everything happens on. They use cutting edge and eco-friendly hosting sites throughout the world. They're really emphasizing using renewable energy. But what kind of stands them a bit above other providers in the hosted or co-location space is that they do not mark up any hardware costs or any power costs. So they have aligned incentives with the customers. They don't mark up $1 the price of the electricity or the miners that you buy from them. Where they make their money is when your miners are up and running, they take a percentage of it. So that's your management fee that goes to SAS Mining. But this is kind of a company that we're familiar with here at San Antonio Bitcoin Club, and we've had some relationships with them. But what kind of wanted to make me bring this up was their news about raising on Timestamp. And so going through this link here, we'll actually be able to learn a little bit more about SAS and what they're raising for. So let's bring this up. So Timestamp, a little shout out to them too. It's a really cool open source company that is basically building a crowdfunding platform for companies in the Bitcoin space to be able to raise. And they make it really cool for average Joes like me or you to be able to invest as little as, I believe, $100. And you know, it's very much regulated through, you know, the requirements that there are, and you can read all about it on Timestamp. But SAS Mining actually was their most recent addition to the lineup of what you're able to actually get a piece of the company. And so I kind of want to go through this so you can understand what they are and what they have available here, because it's actually pretty cool. So again, SAS Mining, and through Timestamp, they're raising money. So basically, you're able to own a piece of the company. And so we'll go through a little bit about the company, maybe a few things if you're interested in learning about it, or the possibilities of becoming, you know, a little bit of a shareholder in the company. They have a 371% revenue growth over the past 2 years. They started off with, I believe it's down here, it's a little bit further. Let's just keep going through this. They're profitable with a robust expansion plan, a large addressable market in the hosted mining industry. It's anticipated to be $15 billion in global mining market. Their team, which we'll go through in a few seconds, is an experienced team with over 100 million in exits. As an investor, there's a couple cool perks, which one of them being you get discounted rig purchases. And I actually want to kind of jump through this in a different order, because I want you to understand what SAS Mining actually is first before I kind of tell you how you're able to be a part of what they're doing. So I mentioned software as a service, and they're coining Bitcoin mining as a service, which I think is really cool. So I mentioned the platform that they have, but the way that the business works basically and what they do is you're able to log on and buy a miner on their platform. They being SAS Mining, will deploy the miner into a carbon-free data center somewhere in the world. They have in different countries. And then you're up and hashing, and you pay for the power fee, which is a really, really low rate that they're able to negotiate, and receive 85% of the Bitcoin. They take a 15% management fee, and that's why the incentives are aligned, because they're not making any money unless you're making money. So you choose your miner, they deploy it, real-time monitor through the app, like I mentioned, and you're able to watch your Bitcoin flow directly into your wallet without having to do anything at all. So it's a great way to dollar cost average into Bitcoin. One thing that they're doing with this that I kind of want to highlight is what they're going to do with the funds that they raise through this, that they get through this raise. So where is it? We'll go through the team in a second. Again, this is how they make money, 5 to 20% of Bitcoin mining rewards. They're very upfront about it. And they think that this is a model that works because it's very transparent pricing. You can see how much you pay for the miners and for the power, and there's zero markup that SAS Mining is making off of it. Here you go. So the use of the funds that they're going to require, or that they're going to acquire, 40% of it will go to power deposits for new additional renewable energy contracts so that they can expand the capacity to host more miners. Technology and operations will take 25% to enhance the Bitcoin mining as a service software platform, and to be able to scale their systems and handle 2 to 3 times the customer volume which they anticipate. 20% will go to customer acquisition, so the marketing efforts to reach Bitcoin conscious consumers, different advertising routes, digital and community engagement. And finally, the 15% remaining will be going towards working capital and administration. So for the team, legal, all the back end stuff that requires running a business. So they got a couple cool incentives to early birds if you want to become an investor and get a piece of the company. I think it's a great opportunity, whether you want to become a miner. It's a great opportunity to become a customer and purchase miners and kind of start dollar cost averaging your sats yourself. Or if you want a little bit, more of a play towards a company that's building in the mining space, you can actually own a piece of SAS Mining by doing that. So it's really cool. You can kind of check out, they have the Form C, all the SEC filings. This is very legit. So I encourage you to check it out, learn about SAS Mining. And if you're interested in becoming a miner through SAS Mining, please contact us. We'd be happy to put you in touch with them. They've been a real big supporter of San Antonio Bitcoin Club from the beginning. So it's really cool to see Ken and Nathan, who's a part of the marketing arm. Personally, we've met before. He's a great guy out of Denver. And so we're happy to support them. We're happy they're supporting us. So if you have any questions, please feel free to reach out. But this is a pretty cool opportunity. Okay. Any questions about SAS or becoming a miner? This is a good way so you don't have to plug those miners in at home and, overheat your home, or you can't hear anything because it sounds like a train's in your garage. So really cool what SAS Mining is doing. All right, let's move on. Whoops. Did I skip one? No. Okay. So one thing I kind of want to take a look at, especially at this time of year, is how the hot weather, especially in Texas, being a very big mining destination for public miners, for private miners, private companies, or just people mining at home. The hot summer weather kind of really does take a big effect on fleets, big and small. So I kind of wanted to give a little bit of practical anecdotes of this happening. So we'll kind of discuss a small time miner like myself, and then see how this affects, or how big companies, public companies like Riot and Marathon, are able to take this this issue or this opportunity and kind of make it profitable. So it's a very different effect whether you're a big company or you're a small miner. Where's my cursor? Okay. So firstly, curtailments happen because if a mining rig or an entire fleet is not hooked up to a private power source, so call it you're producing your own power on a mining well, or you have solar, or whatever the case is. If you have your own power, it's a different story. But if you're hooked up to the grid, a lot of times Bitcoin miners, they are able to be a buyer of last resort for power. So that means during times when power is ample and sufficient, they're willing to purchase that power when nobody else is. So that's good for power producers. But when the grid gets strained, which happens a lot of times, especially in Texas and other places when it's summertime, people turn on their ACs. It also happens on the other end of the spectrum when it's really, really cold, which we saw happen here in Texas a couple years ago. The big freeze we had, a bunch of miners played a part in curtailing their power so that the grid can get the power it's required to be able to provide heat, or if it's summer, cooling to the people who need that power. So one thing that you can see though is that, for instance, on a lower tier level like myself, who has miners co-located throughout different locations in the United States, a lot of times these smaller providers are not able to, they're required to do curtailment, and it happens a lot in Texas. So my experience here with Texas is that the company hosting your miners may have to abide by these curtailment requirements, and they're shutting off power without any kind of forewarning because they're required to. They're on demand response programs, and this allows them to get credits when they need to curtail. But from a consumer's perspective, it's a little bit of a different story. So we, at the lower end, just have our miners shut off effectively. We can kind of show that by, let's see, what's the best way to show that? I wanted to show one of my, actually what I can do is here. I think it's here. You can kind of see a bit of it here. So in the hash rate that I have, these dips in hash rate, a lot of times recently they've been because of curtailment. So these are periods when power requirement is really high from the location where my miners are at. And my miners will either get a few of them or a section of them or a particular piece of this facility will power down and curtail so that they can provide power back to the grid. And so this basically, I mean, I'm not being charged for the electricity, excuse me. But it is downtime, and we're not mining, we're not making sats at this point. And there's nothing really that anybody can do about it. A lot of people were in my shoes to where this is just something that comes with the territory of being a miner in Texas during the summer. You're gonna have your miners curtailed. Though, as a big company, when you get to start being in the same room as utility companies and policymakers, one thing I wanted to show here is, oops, get back. Whoa, we're way ahead of ourselves. Sorry. I didn't want to spoil that. We'll cut that. All right. So this is a conversation with Pierre Richard and others at the Texas House, I think it's the House, talking about legislation and how Bitcoin mining companies are able to interact with power utility companies, especially in Texas, with it being like the Wild West in ERCOT. This gives good perspective on how they're able to play the game and how it's different from small-time miners like us. So let's see if I can get this to work.
What's the downside to the market of just prohibiting crypto miners from selling back into the market?
Well, most of the sales, if you recall that whole story that came out last year, I think it was around Riot and the amount of money they made from selling back to the market. These are private bilateral contracts that they have with their energy suppliers. So ERCOT's not in the middle of those transactions.
So are they involved in demand response, or is it just
Some are, yeah. So that they're involved in multiple facets of the market. So they are involved in energy trading and marketing directly with other buyers and sellers of electricity, and we may have nothing to do with, ERCOT may have nothing to do with those transactions. And just, I mean, to be fair, there are whole segments that operate in ERCOT that all they do is buy and sell energy. They're traders,
yeah,
they're marketers, energy traders, brokers. So it's a similar kind of a construct. Then they do participate, some of them participate in demand response, so that when they're operating, if we ask them to curtail, then they will curtail, they'll get a payment for that demand response, just like anybody else would. A steel mill gets that, any manufacturer gets that, crypto.
So the process that he described for when they're looking at coming on and opening a facility, is that the same process that you see the crypto miners going through?
It is, they have to go through the same thing, and we model them, we essentially model them at their full capacity. On what you're seeing on the charts, we're actually discounting this because this is a reflection of peak load. And so at peak load, when typically you have scarcity, they tend to reduce their consumption down to about 10 to 15% of their peak load. So we lower their amount of the peak contribution here for those specific types of customers. But we model them on the system before we connect them as full load. So if they're a 150 megawatt crypto mining facility, we will do the same stability study for them like we would do for a data center at that megawatt usage.
And he mentioned credit concerns So, and I guess you all take that into account when you're looking at what those deposits, what the security might be for them to interconnect.
Yeah, and that's more between actually the transmission operator and the crypto mining facility themselves.
Right,
They would work through.
But I mean, do you,
We don't really get involved in those commercial transactions, so.
okay. Thank you.
Yeah.
Thank you.
Thank you.
Okay. Just turn that off. Okay. So it gives you a really cool look at how people, for instance, in legislation or just policymakers are thinking about Bitcoin and crypto miners. They're great customers for utility providers and for states to be able to sell power that is otherwise going to be lost and not used because you're not able to save this power. And then at times of high need, these certain clients, these certain customers like Bitcoin miners and crypto miners are able to power down and send that power back to the grid. So it's pretty interesting to see how the difference between someone on the lower end and someone like a giant company like Riot or Marathon, who's, you know, there's been a couple big times when the freeze that I mentioned a couple years ago, but even a couple years before that, in the summer when it was extremely hot, they were able to curtail to be able to provide the power to the communities and to the utility providers. And they made more money curtailing the power than they would have in Bitcoin mining at the time. So it was a big deal because, you know, this company was able to provide a really good service, be a good buyer of last resort for power, and yet still be extremely profitable by curtailing it. Anyways, okay. All right, we'll move on now. Let's see. So we did a little update about this last month also, and it just so happened that in July, I think it was towards the end of July, another solo mine was hit. So it's really cool, and this was one that really gives a lot of us pleb miners some hope. We can take a look at a few things here, but just a couple of the highlights. This miner had 48 terahash, which, you know, it's not as small as Bitax's, but this is about a quarter of a modern Antminer S21, which is about 200 terahash. You know, 50 terahash, that's half of like the S19s that we're, you know, using in this other room or that we've given away. It's like a $300 miner. So a very, very small commitment. You know, this miner probably costs $3 a day, $3 to $4 a day at most to run in electricity. And the mining reward for this one was 3.154 Bitcoin, including the fees. So I kind of get all this obviously from X again. So I want to go through a couple, just this is a little bit of fun to see, you know, how we find out about these things. We can check it out on the mempool. This first one, I believe, is just one of the first posts that I saw. Solo miner found a block, hash rate of 43 terahash coming from a single worker. Was not a Bitax, but definitely a very small solo miner with only a fourth of the hash rate of an S21. And then this other one, let's see. Oh, this is my solo miner here. That's right. This is another kind of just ongoing update from last month because this is a miner that I personally have and I'm just dedicating to solo mining to see if we can hit a block and really ramp up what we're doing here at the San Antonio Bitcoin Club. Just an update, we have not hit a block yet. We have one miner, which is averaging about, let's see right there, 1 day hash rate is about 97. So it's an S19K Pro. I have it using Brains operating system, Brains OS, so that it's downclocked a little bit to be more efficient. So the average hash rate is about 100 terahash per second. We've not hit a block. This one costs about $5 to $6 a day to keep going, and I'll keep going just to see if we can hit a block. But this is kind of the odds of finding a block, which is really cool about Zcaple. They'll give you the odds based on how much hash rate you have. So you can see I have basically a 0.6% chance over the course of a year to hit a block. and it gets less and less as you get shorter in time. So this is basically like playing the lottery, but this is a much better version of the lottery than anything else. So I think, and one thing I want to check out actually, we'll go do this together. I'm just going to open up the mempool. I believe there was another block hit either yesterday or today. I think me and G were talking about this, so I want to go see. We could just search Twitter, but a cool way to kind of see that we'll all learn here together is if you open up the mempool, that is that one. Let's go current. And then we'll just work backwards and see if there's any other solo blocks. Okay, so here's the current. These are all the previous blocks, and these are the blocks to come on that side. So I just want to go back not too far so we don't waste time doing this, but I feel like there was... unknown. No, it doesn't mean. I think it was a solo pool. It was Brent. Maybe not. Either way, would be pretty cool if we could find it. No. Oh well. I'm not going to keep going. You can cut all this. Okay. Well, it's a pretty cool story. It gives a lot of us miners hope that, you know, there's still a chance for us out there to hit a block. 3.1415 Bitcoin is a pretty good thing to win there. All right, let's move on. Break real quick for our other sponsor, Casa. Really good option if you're looking for a multi-sig wallet. Casa is extending a 25% discount towards their yearly subscription for the wallet. Use code SABTC for 25% off. Thanks to Casa for everything they do for us. Okay, so this one I think is kind of the coolest story happening currently in the mining industry. And it's something we've been preparing for. We've known that Proto was working on a mining rig. Proto is a company that sprouted from Jack Dorsey, who originally created Twitter, X, and Cash App. He's a OG Bitcoiner and really been working to expand Bitcoin and its adoption in various different industries. Through various different ways, and the most recent is Proto, which is a company that is open sourcing a new Bitcoin mining rig and a fleet management service. Not all aspects are going to be open source. I'll say that they're still kind of debating on which parts are, but the entire Bitcoin miner, I believe, is completely open source. I think maybe the management stack is still in debate. So a few things about this miner. It really is changing how manufacturing of ASICs, or miners, Bitcoin miners, is going about and probably will be going forward. From the beginning, you know, I think we've talked about this before, but mining started off, you were able to do it on a computer or CPUs, GPUs. It got to the point where ASICs was the only way to mine Bitcoin, and that's what we see today with these 30-pound clunker boxes, and they're all a variation of the same design. And it's kind of been a problem, and it's something that Proto saw, and I think they went after that specifically. So what they're doing is making it a very much more of a modular design. So instead of, if you think of the housing of a Bitcoin miner, the outside of it, as being part of the physical miner itself, it's actually part of the infrastructure now. It's part of the setup to begin mining. And the parts that actually do the work, like the hash boards, the PSUs and the fans and the control boards and that type of stuff is all going to be modular to where it can be upgraded without having to completely discard the whole miner. It can be serviced and maintenance without having to take the whole miner offline. So it's really changing the way that creating a miner is being done, and it's going to have effects for small-time miners like us, all the way up to giant public companies and big miners that are megawatts on megawatts. So before I go into a little bit of the details, one quote I really liked that kind of sums up the idea of this is that if a hash board fails, the rest of the system keeps mining. If a fan dies, you literally pop it off and snap a new one into place. No shutdown, no lost revenue. And if you're a miner in any sense and you've dealt with or put your hands on miners or heard that your miner's going down because a fan is out and we have to order a set of fans and it's going to be down for a few days, like this is music to your ears. This is a completely different setup, an ability for operators to be able to really limit downtime. So this first picture we'll go through right here, and we'll go through a couple links. But what you can see is the miner, these hash boards vertically are going to be able to be pulled out. That's the infrastructure, that's the housing. The PSUs are modular underneath it, the control boards and all the systems on top, and these fans actually are just pop in place. So if they go out, you have one on the shelf, it literally just pops right back in. So let's go through a few things. I guess we'll start with Proto's, a couple things that they said themselves. And then there's a really good, like a generalized review of this event that happened where they announced this. So this was done at the Core Scientific facility in northern Georgia. And there was a lot of presence from Bitcoin mining companies, nonprofit endeavors, plebs, heat punks, the 256 Foundation was there. So it was a really big event, really high signal, and I want to go over a couple of things. So this is basically just straight from Proto's X. So it marks the end of rip and replace Bitcoin mining. The Proto rig, it's replaceable hash boards. They anticipate being able to save 15 to 20% during each cycle upgrade because you're not actually having to pull the entire miner off and throw it in the dumpster. All you're doing is replacing certain parts as they're needed. So it works with legacy facility setups. Let's go through one of these videos, which is kind of cool. It's kind of just their promo for the whole thing. So this is the fleet management system. See how the miners' fans are just going to pop on and off. Going to have a lot of really good controls, being able to see down to the chip level. One thing I read also was even that design, which is more squared compared to, let me turn this off, which is more squared compared to current miners, which have a weird like rectangular shape. And what we hear from a lot of giant operators and fleets and huge mining data centers is that the spacing, the way they're constructed now, especially a lot of the Antminer S19 series or the S series, they don't fit perfectly, and then they're oblong in one area, so where it leaves a lot of either cold aisle or hot aisle like drafting. And so this being a flush, just basic square, a lot of people that I heard of from this event are really happy about that. It should fit into legacy systems a lot more firmer and kind of get rid of some of those hot and cold aisle issues. Okay, so the other piece I wanted to go through, which is probably going to give a better understanding of the importance of what this is and just a general breakdown, is right here. Okay, well, what I will do then is just kind of read it. You won't be able to follow along, but it's mostly just text anyway. So this proto rig, this is from Rob Warren. He says what seems like a simple hardware announcement is actually a massive evolution in how mining farms work from the ground up. So while everyone has been wrestling over how to squeeze another joule per terahash out of the newest generation miner, Proto built the farm from the machine level up. To understand why this matters, you must understand how Bitcoin mines make money and what their largest cost centers are. The three largest expenses mines will incur are facility build and retrofits, electrical costs, and machine purchases or maintenance. So operators pay immense amounts of money setting up very specific facilities that are optimized to run machines. But they run into serious problems down the road. The machine size, the power draw, the footprint changes. This can mean massive retrofit costs. So it's not sustainable to spend tens of millions of dollars on facilities filled with hundreds of millions of dollars of machines, only to redesign your tens of millions of dollars of facilities the next time you spend hundreds of millions of dollars on newer machines. So instead, Proto has done something incredible. And if we can, I'm just going to bring this back up actually. I can at least stare at that design. It'll give you a little bit of an idea.
Put it on.
It should just come back. Really messed this up, didn't I? Let's see if this does it. Okay. So it's the same picture basically that I'm looking at here, but so they treat the chassis as the machine as farm infrastructure and allow you to hot swap the boards, the fans, and the power supplies as technology advances. So you'll probably pay more initially to set it up, but with Proto machines, after the chassis and infrastructure costs, the rig should be much more profitable over time. When the machine fails, whether due to a fan going down or a board failing, you don't lose productive hash power of the entire miner, just of that part. In the past, you would lose it of the full machine. So for the duration of the failure and for the time it takes to pull, disassemble, and repair the machine, your miner's down in those instances. By maintaining the chassis as infrastructure and making the components modular, Proto allows you to keep failures highly localized and repair via hot swap. Hot swaps reduce the repair times from hours to days and seconds, and this is reflected in higher profitability directly. So when it comes to upgrade your fleet, you only have to upgrade components instead of the entire machines, and it allows you for lower marginal costs per upgrade. And again, what Proto sees is about a 15 to 20% decrease in costs over about a decade, because you'll be able to use the same chassis and infrastructure of these miners for about a decade instead of the current life cycle of a miner, which is probably 3 to 5 years. So it's a really big difference, and I think this is kind of going to be the way that a lot of miners, big and small, are going to start to go, just because it makes more sense economically. Okay, any questions about Proto or what they're doing? I know the event was kind of low-key, or I didn't hear about it, but it was really cool to see a bunch of people in the industry there, especially the 256 Foundation. So a lot of news coming from them, and we'll have more information about availability and the pricing as soon as they make that public. This is the company? Yeah, the question was about the company Proto, and it is Jack Dorsey, yeah, from Twitter, or when he created Twitter. Cash App, yeah. He's the owner, or the founder of the company. So I don't have a whole lot more. If there's any questions, we're happy to jump on that, but if not, I do appreciate you guys coming out to the second edition of the Bitcoin mining workshop, and we hope to see you guys again. Thank you.